Hi, I'm Vickie Hall with RE/MAX Masters Millennium, and I'm a real estate agent that specializes in helping seniors with their real estate needs. Since I deal with a lot of seniors, I've met a lot of other people that specialize in helping meet seniors' needs, and I'm going to be talking to one of those people right now. This is Mike.rabon with Mortgage 300, and he specializes in HECM loans, or home equity conversion mortgages. You might be familiar with that product as a way to pull equity out of your house, but there's another way that you can use HECM loans also, and Mike is going to talk to you about that. So thank you for joining us,
Hi, Vickie.
Mike.
Thanks for having me today. The home equity conversion mortgage is an excellent tool for seniors. What a lot of seniors don't realize is once they retire and they go to a fixed income versus a variable income where they're building wealth, they think that they don't have the opportunity to buy a new home. What they have is what they have, and that's what they're stuck with for the rest of their life. But with a home equity conversion mortgage, they have the opportunity to buy a new home with the equity they have in their home, and possibly even walk away from the purchase with some cash in their pocket.
Wow.
So it's a great way to buy a new home. It's just learn the process through you and I. You will help them sell their existing home, and I will help with the purchase of the new home. Timing wise, people think, oh, these are going to take forever. They don't. I've closed a new purchase in 20 days.
Wow.
They work very well. The amount of money it takes, the amount of equity to buy a new home. Let's say if you're in your 60s and you're going to buy a $600,000 home and you've got 320 in equity, you have a good chance of just buying that home with half of the sale price of your previous home.
So I can buy a $600,000 home with $320,000?
About that, yeah. It depends on your age. The older you are, the more money you can get, basically, in a simple nutshell. So, you got to assume at least 50%, of the equity, and then the rest is. So it's a good way to keep some of that money in your pocket from the sale. Get into a home that's right-sized, right location, near family, less upgrades necessary, and I like to call it seniorized. You know how you see you baby prep a home. Seniors still need the same things, handrails and special entrances and things like that. Ramps, right. So you and I together will help them find that right home and help them get into it and improve their life. And this is a rest of life type loan. If it's your last home, this is a great way to do it.
So say they have a 2-story home, excuse me, and they are looking for a ranch home with a main floor master, a laundry room on the main floor, but they don't want something really outdated. Was that something that can work into
Absolutely.
the plan?
It's whatever you can find for them that fits their needs. And then we'll look at the amount of the net they have from the sale of their previous home and determine how much of it they need to use to buy the new home. In today's market, as you know, in this market, purchasing right now is almost a cash market.
Right.
And you may need to bring extra money to close. Seniors have a great opportunity because they may have that extra cash they need to lay on top of the purchase price.
Wow.
And
So they can be more likely to win the bidding war?
they have a chance, yes. They're going to have the cash where a lot of young people that come to me now and say, hey, I'll qualify for a $300,000 loan. I said, well, you're going to need more because this market is requiring purchase price plus. I don't know, what do you think the average is on additional?
I'll tell you, I think it's 4 to 5% over asking price.
Right. And in the seniors world, they may be able to have that cash. Now, I don't like them to use that extra money for that, but it may be the way they get their rest of life home. And payments are not required.
So how can I buy a house for $600,000, put $320,000 down, and not make a payment?
That's a great question. The FHA and HUD realized many years ago that we have a tsunami coming, and the tsunami being the baby boomers. Baby boomers, once
you
they
and me.
got to this, it's you and me. I'm almost 70 myself. They realize that once these people get there, they may not have a lot of extra money. They may have had to use their savings to take care of kids, or solve problems. Baggage comes with age. But what most do have is equity. And the only way to access equity is to sell the home or take out one of two kinds of loans. One, a kind of loan where you make payments, and if you don't make the payments, you're going to lose the home. Or a reverse mortgage, a program set up by HUD and FHA to allow you to purchase a home, and the payments will be paid when you leave the home permanently, either horizontally or vertically. You know, when you leave the home for the rest of your life, then the home pays off the debt.
I get it, horizontally or vertically.
And it's funny, when I talk to seniors, I do talk about this light at the end of the tunnel, and they get this whole senior thing, you know, and they understand, you know, we're talking rest of life actions. And it's fun. You know, they get a kick out of it. You know, when I ask, you know, when we're thinking about, they want to know how much equity is going to be left when I pass. Because this is a negative amortizing loan. You're not making the payments, so the payments are piling up in the background. And so we look at an amortization table. And interest rates are in the low threes on reverse mortgages right now.
Wow.
So it's not bad.
Good.
And appreciation is, you tell me, in Denver, what's appreciation?
15% the last year.
Oh my gosh, 15, is it that much? So the interest rate is far lower than the appreciation of the home. So when we go out they want to know what's left in the end. I say, well, when are you going to die? You know, and they know the answer. You know, when you get to be my age, your age, you know what your life history's been. You know what your family stats are. So you look out and say, go to that age on the amortization table, look at what that house is expected to sell for with just a 4% appreciation, and there's always a ton of money left.
So what if I run out of money? What if I live to be 99?
That's a great question. If you could live to 200 and this loan would just keep going, you would never be required to make a payment for the rest of your life. There's no end to this. Well, the end to this loan is when you sell the home or leave it permanently. And that's another important point. You own the home. You know, it's not the bank doesn't own it. You own it. You can do whatever you want with it. You can have whoever you want live in it, as long as you do three things. Well, there's four things actually. Pay your tax.
There's a catch.
Yeah, it's a little bit of a catch. Pay your taxes. Pay your homeowner's insurance. Make it your primary home, and don't let it fall into disrepair. Real simple. And nobody's asking you to pay them anything except the county and your homeowner's insurance agent, you know. But and the only financial qualification for these loans is that you have been on time with any household payments in the last 24 months. That would be HOA, any house payments if you had them on the previous home, and taxes are paid up for the last 2 years. And that you have enough income to pay the taxes and insurance. And for most people, that's less than $2,000 a month.
Wow.
And you're not paying it to the lender. They just want to know that you have it. That's all there is to it. It's incredibly simple. It's far easier than a normal loan, and you don't have to make payments.
So this is an FHA-backed loan?
This one is, yeah. The version of the homes, the version of the loan that goes up to a home value of $822,000, $822,375, something like that, is FHA backed. Now, if your home is worth $1 million, they still value the amount that you can borrow on the 822. But if you want it to be the whole value to be considered at that point, then there are proprietary options out there that go up to $4 million through the various lenders in the reverse mortgage space.
So this sounds almost too good to be true, but if it's FHA government backed, does that give, give me some confidence?
I hear those words all the time. It's too good to be true. I say it's not too good to be true, but it's too good to be free, because there is an FHA insurance policy on these loans to help guarantee that the program stays solid and that you are able to pay back. The only amount that you're required to pay back is the value at the home at the time you die, or the loan amount, whichever is less.
Okay, say that one more time.
The value of the home minus 5%,
Okay.
or the loan amount, whichever is less. So let's say we go back to 2010. The market has crashed. You owe, your value of your home now has dropped from 600 to 300, but your debt on it is 300 plus. You're only paying back the value of the home minus 5%. If that loan amount or what you owe is now $800,000, FHA eats it.
Wow.
And no one's going to come after anyone in your family for that money. No, they're not going to come after you. It's called a non-recourse loan. The home is required. The home is the entity that repays it, not you.
Is the security.
So if your heirs, at the time you pass, they have options. They can pay off the loan and keep the house. They can sell the house and pay off the loan. Or they can just walk away. No one's ever going to come after them. They can do whatever they want.
Wow.
Now, we always say, if you've got all this interest built up, you want to pay off the loan, because that can be deductible. That can be a heck of a good tax deduction. So it's worth talking to a CPA about.
Excellent. Lots of things to explore.
Oh yeah, I get talking about this and I get carried away.
I can tell you're passionate about this
I
product.
am. Seniors come to closing in tears often.
Excellent.
Yeah.
So if seniors want to get hold of you, how would they reach you, Mike?
My number is 303-396-2804. And give me a call. We can talk about it. I know a wonderful realtor that you should talk to, and we'll help out.
Excellent. So I'm Vickie Hall with RE/MAX Masters Millennium. Whenever you're ready, give me a call to discuss your real estate needs, and I can hook you up with Mike also. Thank you for
Very good.
listening.
Thanks, Vickie.